A CPA most definitely is going to be in the tax realm, and that's not going to be somebody that you're going to hire internal.
Yeah.
Now, CPAs can fill a bunch of different seats. They can fill your bookkeeping seat, they can fill your controller seat, they can fill your
Yeah.
CFO seat in some cases. It just depends on what that particular accountant skill set is.
Hey, everybody. Welcome back to another episode of the Richer Geek Podcast. Today we have Chris Hervochon, CPA, CVA, sole proprietor of his CPA firm, and he provides outsourced accounting, tax prep services primarily. Listen, all you founders, for growth-minded entrepreneurs, primarily in the marketing creative agency space. In 2018, he was only one of 41 CPAs honored by the American Institute of the CPAs as a member of the Leadership Academy's 10th graduating class. Unfortunately, he's a Phillies Eagles fan. Steeler Nation, here we go. But he does listen to Metallica, which I love. How you doing, Chris?
Doing great, Mike. Thanks so much for having me on.
I almost wore my Steelers hat, but I was like, well, it's all right. I grew up in Indianapolis when we didn't have the Colts. And I
Okay.
wasn't going to be a Browns fan.
Nope.
Cincinnati Bungles, Cleveland Bears, but
So here,
Mean
here
Joe
you are.
Green, Terry
Now you got
Bradshaw. So I had the choice. It's like going, I love the Dirty Grit, Jack Lambert, the Steel Curtain. All right, that's enough of that. And then you have the Philadelphia Eagles. Yeah, whatever.
yeah. Hey, stop it. We just won the Super Bowl.
Oh, I know,
Hey,
I know. That's why I'm teased. I was waiting for you to say that.
you got Aaron Rodgers though, so you got something going for you.
A lot of drama, I think.
A lot of drama. You
A lot of
definitely got that
drama's
going for
coming.
you.
I think we're going to have a lot of drama. Maybe he'll get hurt in the first preseason game, and then we can start winning. So I'm crossing my fingers for that. Um, Chris, before I we get into the meat about of the podcast, tell us a little bit about who you are. How'd you get into your CPA CVA role, and why did you decide that growth-minded entrepreneurs is your niche?
Yeah, good question. So I majored in accounting in college. My dad was an accountant. And he kind of steered me in that direction a little bit. Played college golf. So when I graduated, I actually turned pro and did that for a minute. And actually, my dad's very sage advice was, "Well, you'll know when you go broke." And so, as inevitably happens, right?
Yeah.
The golf thing didn't work out, and so decided to go use my accounting degree. Worked my way up through forensic accounting, corporate finance. Started what is now Better Numbers as a side hustle 14
Yeah.
years ago, and it just kind of grew to the point where it's like, all right, either I'm going to do this full time or I'm going to quit this and focus on my 9 to 5. And decided
Mhm.
that I had something to offer to small businesses and have a relatively unique skill set, and so decided to pursue that and been full time doing this. It'll be 7 years in a month, actually. So I've enjoyed it. How we landed on our niche, we started out really in professional services. So
Yeah.
my first client was a marketing agency. My second client was a marketing agency, and kind of leaned into that over the last few years. As it is now, probably about 40% of our business is marketing creative agencies, about 40% is trades and trade related service based businesses, and the other
Mhm.
20% is pretty much everything else. And it's just become obvious over, since operating my firm, that the growth minded entrepreneur mindset, those are really the folks that we can help and who I'm most interested in helping. Those are the folks who are interested in taking what they have and trying to grow it into something more. And that's interesting to me. So that's kind of what we lean into.
So tell me a little bit about, you know, when I first started in my business, I just had a regular CPA. How do you differ from the regular CPAs being just number crunchers and things like that? Do you do any type of advisory work, or do you do anything else than let me know if I owe or get a refund?
Yeah. So I would say, um, historically speaking, the traditional CPA is going to be somebody who does tax
Hmm.
and or audit. And
Hmm.
that's just kind of what they do. So the traditional CPA firm, I would say, is going to tend to be a volume shop. And whenever you're a volume shop, your prices are going to tend to be lower.
Mm-hmm.
You're going to make all your margins based on volume. And whenever you are cranking out a ton of volume, it's really hard to lean into that advisory. You just don't have time.
Mm-hmm.
I think probably, this is my opinion. You can do probably one individual that's good at what they do in the tax world can probably handle about 100 clients.
Mm-hmm.
That's about it. So if you kind of think about historically tax prep prices, I mean, if you're in the $250 range to $500 range and you're only doing 100 clients, like you're not really making much money, right? That's a struggle bus. So what you have is a lot of CPAs who are handling multiple hundreds of clients. And when you do that, you just don't have room for the advisor. You don't have the time to sit down and talk to the client. You don't have time to dig into the 1040. You don't have time to be proactive. You just don't have time for those things because you can't do that and simultaneously make money. So where we are, our prices are a little bit higher, especially on the tax
Mm-hmm.
side. But we structure it in a way where we build in that advisory piece throughout the course of the year.
Mm-hmm.
So we do that on the tax side, and we also do that on the outsourced accounting side as well. So we've got fewer clients. We're at 66, I think, right now.
Mm-hmm.
In total, we do about 110 returns is what we'll do probably this year, something like that. But it leaves plenty of time for that advisory, and we include it in our packages too. Everything we do is a package. So it's not like you're going to get a bill. You're not going to call me and say, "Hey, Chris, I got this question or whatever," and get a bill for it. Like it's already baked into your price. So
Yeah.
that's the way that we've structured our firm, which I think is the way that probably the newer, younger firms are probably going more that way. I would say there's most definitely still room for that,
Mm-hmm.
1040 kind of grind type of firm, but that's just not us. It's just not who we serve.
Yeah. And, at some point, ladies and gentlemen, as I grew my business and as you grow your business, you're going to sit there and say, I am now an entrepreneur, not a W-2. What is the difference between different tax strategies? Because they're very, very different.
Mm-hmm.
And that person, and I've gone through a lot of CPAs, those type of high volume people, to me, it was so worth it. At first, I was like going, how much? Are you going to charge me per entity or, I mean, tens of thousands of dollars? But then
Mm-hmm.
a year later, it's like, wow, they just saved me 85,000 that first year. So that 10, 15,000 that I paid them that year was, yeah, all day long if you can save me that type of money. So at some point, ladies and gentlemen, you're going to have to get to that point where it is so worth it to have somebody that gets into more of the advisory also. I love the quarterly calls. I don't know if you do some quarterly calls or monthly calls
Mm-hmm.
with your clients, but
Yep.
sitting there saying, and tell us how that works a little bit. I know how it works with me about, hey, we're seeing this and you're getting ahead of things, right?
Mm-hmm. For sure. And that's a really great point too. The difference between the W-2 individual and somebody who owns their own business. They're very, very different sports.
Mm-hmm.
Somebody who's just got a W-2, who's got a mortgage and,
Yeah.
a spouse and a kid or couple or whatever, like that's either a TurboTax situation or that's going to be, and if you're just really super uncomfortable with apps or whatever, maybe you're just not tech savvy, then you go to your local tax preparer who's going to charge you $250, $500, whatever. And you're just going to give them your stuff. It'll take them 20 minutes. They'll grind it out. You're done. It's great. But for somebody who's got a more complex situation, which is pretty much every business owner ever, it needs to be a little bit different. And the thing about tax planning and those quarterly meetings is that the advice that you're going to get compounds. So yeah, you're going to save money in year one, but then you're going to probably save money in year 2, 3, 4,
Mm-hmm.
5, all the way out. And there's also there's a time value to that money as well.
Mm-hmm.
So that's going to be kind of your standard environment. Where we're at right now is an interesting environment because we know that we're going to get tax legislation as we sit here in probably 2 months, something like
Mm-hmm.
that. It'll be the biggest tax change that we've had since 2017. So the conversations that we're having with our clients right now are kind of twofold. One, it's what we're hearing economically because we pay attention to that. How
Mm-hmm.
does that impact our clients? What are is our client base as a whole, are they experiencing similar things, across the base and as it pertains to that economic environment? The answer is yes, which is very mixed right now. And then, so that's the first piece. And the second piece is, well, what are we hearing about the tax legislation? How's that going to impact you? So it's really interesting. Over the last couple of weeks, we've been doing quarterly estimates because they were due on the 16th. And so we're having these conversations. It's like, well, we're operating under one tax law right now. Under that tax law, you should be paying this and you should be thinking about these things. But we also know that in 2 months, that might not apply. We just don't know. So it's really kind of a wild situation right now. And I think it was yesterday, the Senate came out with their version of what the bill is going to be. The House has their version. They are two very different things. So we'll see what happens, but those are the conversations that we're having. So you just need somebody, especially if you're a business owner with a more complex situation, you just need somebody who's paying attention to these things and that can take those things and then apply it to you. What does that mean for you exactly?
Yeah. Yeah. And that is true. I'm kind of holding off on a sale of one of my assets right now because I was like, well, it might be more favorable in 2 months, and
Maybe,
but
yeah,
you just don't know,
yeah.
and then in almost 4 years from now, it just keeps. I do not envy the CPAs because I know the code is not that thick. It's
70,000 pages.
70,000 pages. And I'm just like, oh my
Yeah.
God.
Well, and that's not even the worst part of it. The worst part of it is all the state and local stuff.
Yeah.
Everybody skips past all that, right? Especially in the environment that we're in now, post-COVID. We got a lot of remote workers. We've got businesses that are creating nexus in multiple states where they maybe intended to do so, maybe didn't. I just got a notice from California from one of my clients this morning who 5 years ago, hired an employee in California, didn't know that they were going to create nexus in California. Now California's after them for tens of thousands of dollars, that sort of thing. But everybody says IRS tax code is very complex, and it is. It's true. It's 70,000 pages. It's a lot. There's nobody out there that knows the full thing front to back. But you have another element there, which is state and local too, and it's income tax, it's sales tax, it's business licenses. It gets very, very complex very, very quickly.
Yeah. Now, at what point should we start thinking about, and ladies and gentlemen, this is the other next step after finding the correct CPA and advisor. There's this thing called fractional CFOs. And then if you're big enough, you can actually get maybe a controller. Talk to us a little bit about when that might be a good idea. Because, the fractional CFO and then maybe like a CPA that does advisory work, they're kind of the same, maybe different roles, maybe a little more complex. What's the difference between those two, and when should you start maybe thinking about the CFO route?
A CPA most definitely is going to be in the tax realm, and that's not going to be somebody that you're going to hire internal. Now, CPAs can fill a bunch of different seats. They can fill your bookkeeping seat, they can fill your controller seat, they can fill your CFO seat in some cases. It just depends on what that particular accountant skill set is. In general, our advice to our clients is that you want to be somewhere between 1% and 3% of revenue on your finance function. Okay. So think of it like $1 million business, maybe $30,000, something like that is what you want to be spending. Now, $30,000 is not going to get you a fractional CFO probably. And it's most definitely not going to get you an internal CFO. Most definitely. Like to hire a CFO, a good one, full-time, you're looking at several $100,000 for sure. To hire, and I guess, the kids that are coming out of college right now, you're looking at somebody with, if they're coming out of college, no experience, they're talking about their salary is going to be about 70K plus benefits and all that good stuff. So that kind of gives you a frame of reference of what an accountant full-time is going to cost you. I would say businesses that are sub $1 million, you're going to need somebody who you're for sure going to need a bookkeeping role. And then, probably at that range, you're going to be looking at some sort of like a fractional controller type of skill set. Maybe not a fractional controller per se, full boat, but a fractional controller skill set. The difference between the bookkeeping and the controller is going to be bookkeeping is mostly a data entry function. A really good bookkeepers are very good at quality control. But that controller level function is really going to be focused on the quality control. And then how do we package the financials so that they're meaningful to the business?
Mm-hmm.
Once you get past the controller function, now you're into the CFO function. The CFO function, or the finance function, which is different than accounting, is going to be focused on things that are future focused.
Yeah.
Like how do we do forecasting? How do we do budgeting? How do we get you funding? How do we raise funds? Where should we be doing that? Banking relationships, things like that. So it really just depends on where your business is and its life cycle. Mm-hmm. Hiring sooner is always better than hiring later. But also, you don't want to overspend on your finance function because it's going to take resources away from the other pieces of your business that you're using in order to scale, which is going to make it difficult for sure. And you probably just don't need it until you're, several $1 million in revenue.
Yeah. And, once I got our CFO, there's all of a sudden you start hearing terms that I've never even heard before in my entire life, and I took accounting and things like that. But I remember one because it's my favorite golf course. He goes, "Hey, I see that you're not doing like the Augusta deduction or Augusta something." And I'm like going, I've been there.
The Augusta rule.
But he's like going, "No, you need Augusta." And I'm like, I'm waiting for him to like, so
yeah, like what does that even mean?
What is that? So talk to us a little bit for these entrepreneurs out there, because kind of the CFO is kind of, they can do your taxes, they can do your financials, but they also look at the founder themselves, say, hey, this is how you can maximize you being an entrepreneur, maybe creating generational wealth by saving or deferring things. What are some of the different ways that I know that our entrepreneurs may not know about, that you can tell us, a little bit about, hey, you should be doing these different types of things? And who, it's not the CPA that does that, because the CPAs really don't provide ROIs, right? I mean, they just kind of punch in.
They might. They
They
might.
might.
A good CPA for sure is going to give you an ROI. For sure. Anybody that you hire really should give you an ROI in the finance function. It's easier to measure some of it than others, but you should be getting an ROI. On the tax side, like the CPA, it's fairly simple to get an ROI and to figure it out. So what am I paying my CPA? And then what is the tax savings that I'm going to realize by using that person and having them explain to me the different tax strategies that I can implement, and then actually implement them. So yeah, there's a definite calculable ROI with working with a CPA. I think it gets harder in the bookkeeping controller fractional CFO space. It's some of it's just not tangible. Some of it is, some of it's not, but it makes it just a little bit harder. On the CFO side, depends on what sort of skill set that CFO has. Not every CFO even has a financial background. So it just, So some of them come out of the tax world. Some of them are CPAs. Some of them aren't. Some of them come out of operations. Some of them come out of sales. It's kind of wild. So you just need to understand exactly what that person's skill set is and what exactly that they can help you with. Things that founders really should be thinking about. I would say the lowest hanging fruit is going to be entity structure.
Yep.
For sure. Most businesses, I would say, are LLCs. There's a smaller population that's going to be a corporation. But then looking at how your entity is formed and then how you want it to be taxed, that's going to kind of tie into, what is our long-term strategy going to be? What's our exit strategy going to be? You should be thinking about that earlier than later. I would say entity structure is probably the biggest low-hanging fruit that you should be thinking about.
Yeah. And, I also realized that, a lot of the number crunching CPAs, I guess I didn't know this either. There's two different in-home office. There's like a short form deduction, and there's like the longer form. And most of them that I dealt with just do the short, get easier version of your home office deduction. And there's this other one. They're like, well, now you're losing a lot of money because, and there's a lot of people that are virtual offices now, and it's like if they took the extra 5 or 10 minutes or however long it does and do the long form way of the home office deduction. So
You, you
is
know,
that true? There's two different ones?
yeah. You know why that usually happens?
Hmm.
Because there's no conversation on the front end.
Yeah.
That's
Yeah.
why. So when you're thinking about your tax prep and how that goes, so your CPA probably gives you some sort of a tax organizer, and it probably asks you about the home office deduction.
Mm-hmm.
You may or may not answer the questions, depending on like you just may or may not, right? Everybody's different.
Sure.
So you may or may not. If you don't, what the CPA is going to do is they're going to look at whatever last year's tax return said, and they're going to do the same exact thing,
Hmm.
right? So because the rationale there is, well, I'm getting them this tax benefit. I don't have the rest of the information.
Yeah.
We're probably up against the deadline. They're not gonna give me what I need, or they don't have what they need, or like whatever the reason is, right? So at least the CPA's got you some sort of benefit.
Yeah.
Um, the way that we handle things like that is we send
Mm-hmm.
out a standardized tax organizer. We make sure that all of it gets filled out. Relative to the home office deduction, like we send you a template. Like we want this template filled out for sure. Like we need to know square footage of the home. We need to know what you're spending on electricity, what you're spending on internet, blah, 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 blah.
Yep.
So you finish your organizer, great, cool. Then we have another conversation and we go
Mm.
through the organizer together.
Yeah. Good.
That conversation is key because then we make sure like what you provided makes sense and we got everything that we needed. We've already got a relationship with you, so we know kind of sort of what we're expecting. Like I know that you work, or I know that you've got 3 kids, or I know whatever. We have because we have a relationship. So if I know these things and it doesn't make sense with what you put on your organizer, now I can
Mm-hmm.
say, hey, Mike, like what's going on here? He's like, oh yeah, I forgot about whatever. And so we can kind of work through this together. So you take the first blush at it, we make sure that it's fully baked together, and then you end up with a tax return that's, going to benefit you the
Mm-hmm.
most because we've taken all of these things into consideration. So that's another really good example of what kind of a tax account are you looking for? Is it going to be somebody who's just going to churn and burn through a bunch of 1040s in the tax season, or is it somebody who's going to you're going to have that relationship with? You're going to pay for it, but
Mm-hmm.
in theory, you're going to get that ROI from.
Absolutely. Yeah. I I can't believe I kind of bitched about it. It's like, oh my God, it's so expensive for these guys, and then like I would have paid that. I wish I could have paid that 5 years ago and found those guys, because it's
Mm-hmm.
so worth it, everyone, to actually have someone listen and get to know you and get to know your business. And talking about listening and talking, how often as a business owner, entrepreneur, minimum, and then how often should we discuss with you, our CPA or advisor, on a yearly basis?
It's a good question. So we have business owners that talk to us like once a year. They're gonna tend to either be micro businesses or they're gonna tend to be
Mm.
lifestyle businesses generally.
Okay.
If that's you, that's fine. Once a year is probably good enough. Things aren't really changing that much. You kind of are where you are. You're doing what you're doing. Once a year is
Hmm.
probably fine. If you're trying to grow a business, I would say the quarterly is probably the bare minimum. Monthly is better.
Yeah.
So our preference is to meet monthly. We start every conversation with the same 3 questions. What's going well in the business? What's not going well in the business? How can we be most helpful? And then the conversation kind of goes from there. So you build that relationship, you start to understand what's going on in the business. I tell all of our clients that like good accounting and especially good advisory
Mhm.
cannot happen in a silo. It's just not possible. Like
Yeah.
we try really, really hard. We cannot read your mind even a
Yeah.
little bit.
Yeah.
If we don't know what's going on in the business, if we don't know what's going on in your life, like we just can't advise you. It just is
Sure.
what it is. We see what's happening in the numbers, but that doesn't tell the whole story. You have to have that context to really bring it together. So monthly is most definitely better. Having those conversations is absolutely crucial. After we ask those 3 questions, then we go through critical issues. Those are
Mhm.
things like, hey, you've got an estimated tax payment coming up. Hey, you
Mhm.
had this really weird transaction last month. Stuff like that. And then what we do is we get into the financials. That happens last. We tell the story. These are the things that I'm noticing. This is what I'm paying attention to. This is what you need to be
Mhm.
paying attention to, and then that's pretty much the meeting. But having those meetings once a month is super crucial, especially if you're trying to grow a business.
Yeah. Okay. So we've talked about the CPA advisory side. You're also a CVA, which you
Yep.
told me earlier, you can actually evaluate the businesses for sale or
Correct.
potential,
Yeah. Value of business, essentially.
value of the
Yep.
business.
Yep. So what's your business worth?
What's it worth? So what are some of the things? Here's what I've known, after buying and selling businesses, that most entrepreneurs don't think about selling their business until they're selling their business.
Yeah.
You know, they should start before they open the business, what their exit strategy is, right? So talk to us a little bit about what are some of the things that business owners should be thinking about while they're working, and then as they're planning to sell, so that you can evaluate and get them the most out of their business.
Really good question. One thing that I would be doing on a consistent basis is talking to my financial advisor.
Mm-hmm.
Different from your accountant, different from your CPA,
Mm-hmm.
your financial advisor. Your financial advisor is going to have the picture of like, what is my retirement going to look like, or what's my next chapter going to look like, that conversation. So one of the things that you want to know in the back of your head is, what do I need to sell this business for? What do I need to save along the way, so that I can be comfortable in whatever the next phase is of my life. So having that number in the back of your head, super important. So that's
Mm-hmm.
number one. Number two is going to be just understanding what somebody is going to be buying when they're buying your business. Most probably what that's going to be is cash flow, really.
Mm-hmm.
Is what they're looking for. They're really buying cash flow.
Yep.
There are instances where they're just buying the assets, and the assets are worth, the business is worth whatever the assets are worth in total. Like that does happen. But for the most part, you're looking to buy either a process or a client base or underlying assets that aggregated together generate cash flow above and beyond what those things are worth, right? So somebody's going to be buying the cash flow. Okay. So how do we get cash flow, and how do we make our cash flow more valuable? So the obvious answer there is some sort of a revenue number and some sort of a profit number on that revenue. Okay. And we want that profit to be actually turning into cash. We don't want it to just be book profit. We want that to actually be turning into cash. Okay, cool. So we have this cash flow machine. That's great. In order to increase the value of your cash flow machine, what you need to do is de-risk your cash flow machine. So what does de-risking that look like? It looks like having really good policies and procedures. It looks like having a trained team. It looks like the owner not having to be working in the business and being crucial to the operation of the business. Like, in other words, the owner doesn't have a job. The owner actually owns a business. Those are two very different things. But just thinking about how you can de-risk those cash flows to make it so it's not necessarily dependent on you. It's stable. It's growing. A buyer can come in and they can just say, oh, this business kicks off $1 million in cash. Like, that's what I'm going to get when I come in. And it's not going to be this risky thing that's going to blow up in my face. Right. So those are really the things you should be paying attention to. Also paying attention to the working capital, but I would say that's probably like the third consideration. But knowing what you need to sell it for, knowing how to get your business to that level and what that's going to look like for you, super important.
Perfect. Chris, how can people get a hold of you?
Best way to find me? Yeah, absolutely. Best way to find me is on our website, and that's betternumbers.cpa.
Betternumbers.cpa. Is there anything else before we leave that you'd like to inform our listeners, something that maybe I didn't hit on?
I don't think so. You did a great job of hitting all the important points. The one thing that I would just say is it's super important to have a relationship with an accountant, somebody who is going to have your best interest in mind, somebody who's going to be proactive, somebody that you've got an actual relationship with. It's worth its weight in gold for sure. And just find that person that you really click with, who has an operating model that is going to be similar to what it is that you need.
Yeah. And ladies and gentlemen, it has saved me hundreds and hundreds of thousands of dollars once I realized that I needed a better CPA. It is absolutely worth it. Chris, thank you so much for coming on the Richer Geek Podcast. Have a wonderful day.
Thanks, you too, Mike. Appreciate you having me on.